The hidden problem with XRP that no one talks about. XRP, often touted as a game-changer for cross-border payments, faces a problem that has largely flown under the radar despite its potential to impact the cryptocurrency's future. While much attention is focused on regulatory challenges, especially Ripple's legal battle with the SEC, and the coin's utility as a bridge currency for international transactions, a deeper issue lurks in the background: centralization concerns and market dynamics. Unlike Bitcoin or Ethereum, XRP's supply and distribution model has led to persistent debates about decentralization. Ripple Labs controls a significant portion of XRP, holding it in escrow accounts and periodically releasing it into the market. This centralized control raises questions about trust, governance, and the actual independence of the XRP ecosystem. Moreover, this centralized control impacts market perception. Investors often worry that Ripple's large holdings could lead to market manipulation or oversupply, affecting XRP's price stability and long-term value. Critics argue that this undermines the very ethos of decentralization that cryptocurrencies were built upon, creating a level of dependency on Ripple's decisions that contrasts sharply with decentralized platforms like Bitcoin. Another pressing issue is adoption. While Ripple's partnerships with banks and financial institutions have been widely publicized, XRP's role in these partnerships isn't always clear. Many institutions use RippleNet technology without leveraging XRP as a bridge currency, reducing the token's utility in these high-profile collaborations. If institutions can use Ripple's technology without XRP, it creates an existential question about the cryptocurrency's true necessity. Lastly, scalability and competition are growing concerns. While XRP is fast and cost-efficient, new blockchain technologies with advanced scalability and interoperability features are emerging, potentially outpacing XRP in the race for mass adoption. This intensifies the challenge for XRP to maintain relevance in a constantly evolving landscape. These issues collectively point to a significant, overlooked problem for XRP: the need to balance its centralized structure with the demands for decentralization, ensure its utility in Ripple's ecosystem, and stay competitive against emerging technologies. While XRP remains a prominent player, addressing these challenges is crucial for its long-term sustainability. XRP, widely recognized for its speed and efficiency in cross-border payments, carries an underlying issue that is rarely discussed in the mainstream cryptocurrency discourse: its centralized nature and the implications for trust, market dynamics, and utility. This problem threatens to undermine its potential to transform the global financial system, despite its technological strengths and growing partnerships with financial institutions. Centralization and supply control. At the heart of the problem is Ripple Labs' control over a significant portion of XRP's total supply. Ripple initially created 100 billion XRP tokens and retained the majority. Today, Ripple holds roughly half of the total supply in escrow accounts, periodically releasing portions into the market to maintain liquidity and fund operations. While this setup is intended to prevent flooding the market, it creates a perception of centralized control that stands in stark contrast to the decentralization ethos of cryptocurrencies like Bitcoin and Ethereum. This control raises important questions. What happens if Ripple mismanages its holdings or uses its influence in ways that don't align with the broader interests of the XRP community? Even with transparent reporting, this centralization fosters skepticism among investors and institutions alike. Many worry that Ripple's ability to inject or withhold large amounts of XRP could lead to price manipulation, making the asset less attractive to those seeking a trustless, decentralized alternative to traditional financial systems. Limited utility in partnerships. Ripple has established partnerships with major banks and financial institutions, positioning itself as a leader in facilitating fast, cost-effective cross-border payments. However, there's a significant catch. Many of these institutions utilize RippleNet's technology without incorporating XRP as part of their operations. For instance, banks can use Ripple's software to connect their systems without adopting the cryptocurrency for liquidity or settlement. This selective adoption creates an existential question for XRP. If Ripple's technology can thrive without its native token, what long-term role does XRP play in the ecosystem? Without sustained institutional demand for XRP as a bridge currency, its value proposition could weaken, reducing its relevance and market appeal over time. Market competition and scalability challenges. Despite its advantages, XRP faces intense competition from newer blockchain technologies. Ethereum, Solana, Avalanche, and even emerging Layer 2 solutions are introducing innovations that offer greater scalability, programmability, and interoperability. These platforms enable decentralized applications, dApps, smart contracts, and tokenized ecosystems, broadening their appeal beyond payments. Meanwhile, XRP remains heavily focused on the niche of cross-border transactions. While XRP is faster and cheaper than many first-generation blockchains, its inability to adapt to broader use cases could hinder its growth. Additionally, evolving payment solutions like stablecoins and central bank digital currencies, CBDCs, further encroach on XRP's core territory, providing similar advantages with more regulatory clarity and institutional backing. Trust and decentralization. A critical challenge for XRP is addressing its perceived lack of decentralization. Unlike Bitcoin's decentralized mining network or Ethereum's transition to proof-of-stake, XRP relies on a unique consensus mechanism known as the XRP Ledger Consensus Protocol. While this protocol is efficient, it is criticized for depending on a relatively small number of validators, many of which are directly or indirectly tied to Ripple. This reliance fuels concerns about whether the network is genuinely decentralized or simply an extension of Ripple's centralized infrastructure. The bigger picture. All these factors, centralized supply, limited adoption in partnerships, growing competition, and questions of decentralization, coalesce into a larger, under-discussed problem: XRP's identity and sustainability in a rapidly evolving cryptocurrency market. While Ripple's efforts to secure institutional adoption are commendable, they don't guarantee XRP's survival or growth as a standalone asset. To secure its future, Ripple must address these challenges head-on. This might involve decentralizing control over XRP, ensuring its utility in financial partnerships, and diversifying its applications beyond payments. Without such strategic adjustments, XRP risks losing its competitive edge, leaving it overshadowed by more adaptable and decentralized alternatives.